What up? What's up, everybody? How's everybody doing? Thanks for hanging out here today. Thank you for joining me. This is going to be another video update. We're doing, of course, the entire book, my Trading Quotes book, which is the third book I published in 2022. And as you know, I like to make my books free, completely free. Here on my YouTube channel at Ched's Trading. It's got a playlist specifically for this book, the Trading Quotes playlist. And we're up to, I think, weeks 35 or 36 right now. Just quickly, again, I'm on Twitter at Big Cheds, YouTube Ched's Trading. Check out the Trading Encyclopedia and all the great stuff. And of course, Bitcoin Live, where I'm a founding analyst, proud founding analyst. So we're going to go to, let's just meet in my other window. Let me quickly adjust, and we're going to move that there. Let's move that over to there. Okay. Weeks 35 and 36. So, as you know, there's one, or you may not know, I have one quote every day, 365 days in the year. These are all my original quotes based on my trading experience. Some of them are kind of technical analysis quotes. A lot of them are like emotional management and trading psychology quotes. Let's get right into it. All right, let's get this done, folks. Week 35, Monday. Do not be afraid of failure. Be afraid of not having the courage to even try. Well, if you're afraid to fail, you're not going to get very far, because failure is part of success. The failures we have are the building blocks for us getting to where we want to be, for us achieving our goals and making it there. And if you're afraid to fail, you're afraid to even try. You don't even have the courage to try. You need to try many times, try different things, different methods, but journaling, writing down your trades, being mindful of yourself as you're trading, entering trades, exiting them, and trying to gain experience. And if you don't even have the courage to try, that's a terrible situation. You need to have some courage, give it a shot, and do not be afraid to try. Just be afraid. Don't be afraid to try. Give yourself the ability and the time to make mistakes and learn from them. And then you'll survive, right? Once you've learned from your mistakes. Tuesday, every time you lose money in a trade, you paid for a lesson. Study and file it away for next time. This goes great with the last quote. So when you lose money in a trade, you literally paid for something. And what's left over, the residue of that failed trade, is a lesson for you to learn. I jumped in too quickly, or I scaled in with too big a position, or I used the wrong confirmation method, or any number of things could have gone wrong. I was boredom trading. I was revenge trading. And so take the time after the trade is over to stop and to try to learn from it. Take the time to try to digest it and see what that residue can offer you, the value that's left over. And that value that's left over is something you can use in the future. So study it and file away that lesson, because you paid for it. You paid for that lesson. Take advantage of it, right? Wednesday, if you do not have a clear feel for what's going on, stay on the sidelines. The chop will chew you up. Price chop will definitely chew you up. And there's a concept of price called price interaction with a key level. I have specifically videos on this in the Trading Encyclopedia, but you can envision like a rectangle, with a very clearly defined upper boundary and a clearly defined lower boundary. And generally, you're going to want to avoid playing in the middle of that range. You're going to get chopped around, a lot of false breakouts, breakdowns. You're going to put the market makers' kids through college. You don't want to do that. So also, that's the chop. The idea also is if you don't have a really good feel, right? Feel is important. Feel is instinct. It's muscle memory. And that comes from studying the chart, from watching a chart, from being ready. Being ready when the price gets there, when the volatility, we love volatility, when the volatility comes and we can contextualize it and play the price action against some of these key levels. So if you don't have a clear feel for what's happening, just wait and watch, keep studying, and be patient. Good opportunities will come. They'll hit you right. They'll jump up and hit you in the face. Thursday, throw your narrative out the window and focus on price action. That will save you a lot of money. Narratives are great. The price should go up. The price should go down. It's part of this theme. It's part of this sector. And they have a new CEO. They have a new whatever. Who cares? Does the market care? That's what's important to me. Does the price action care? And that's all that matters. And if you just focus on these narratives, you're going to get into a position where like you think the market's wrong and you're going to end up trading against the trend. You're going to get into a lot of trouble. So just forget about these narratives. Focus on the price action. It's going to save you a lot of money, okay? Friday, stay jaded and brokenhearted. Falling in love with your trades is a lot easier than falling out of love with them. No one wants to admit they made a mistake in the first place. This is me being poetic. I'm having fun, romantic, or whatever you want to call it. It's really hard to admit you made a mistake. It's hard to take a small loss because you think, and especially if you've done this once where you've refused to take a loss and then you like bought lower and it's worked out. Like most of the time it won't work out for you. But like you think, okay, I'm not going to sell here because I'll just buy lower. And then when it bounces, I'll be fine. It's like blackjack. You just keep doubling your hand until you're back to even. The problem is trends tend to continue and small losses, they turn into big losses, right? So you stay jaded and brokenhearted means don't fall in love with your trades. Just be skeptical of every trade. Be skeptical of every chart. Challenge yourself. Where might I be wrong? And just be methodical, be precise, and execute your trades like a business. Just don't fall in love. Don't be romantic. Saturday. Indicators should be used to confirm a trade idea, not to generate one. Simply put, just because the RSI is below 30, it doesn't mean you should open up a long trade. All of your trading ideas should come from the chart, from the price at support, the price breaking resistance, candlestick signals, like the RSI, the MACD, chalk and money flow, McClellan oscillator, Ichimoku, whatever you want to use. All those things are tools to confirm a trading idea you already have. You never, ever want to use them to originate a trading idea. You don't just, I'm going long because RSI is below 30. Now, in theory, the RSI trick is you wait till RSI leaves 30, right? Because when it's oversold is when the biggest price drops happen. But when it's coming out of oversold, maybe you take a look at it. But you should just use these indicators to confirm your trading idea, not to generate one. That's incredibly important. Sunday. Rule of thumb. Most reversal patterns fail. Most continuation patterns succeed. Trends tend to continue, right? Bull flag usually continues bullishly. Descending triangle usually continues down, right? Price trends will move and then they'll consolidate. They'll shake out the short-term speculators. They'll rebalance the supply and demand. And then generally they will continue down with the trend. Trends tend to continue. So if you're struggling, you're probably playing reversals. You're probably trying to buy bottoms and guess, when a bottom will turn around. But if instead you just play bullish charts and wait for them to dip, wait for them to dip back to a key support level and play continuations, right? So orient yourself to be trading with the trend and anticipating that the price trend will continue rather than will reverse, because trends tend to continue. This is a very key principle in classical charting. Week 36. Monday, fear of losing money goes away if you have a trade idea and you can define when that idea fails. Well, what does that mean? Well, what's your stop loss, right? A stop loss, thematically, I often say it this way, is the stop loss is when the trading idea fails. Your thesis might be, the price is returning to a well-defined support level, and it's always bounced here. So you take a long at support because it's always bounced there. And you say, well, if it loses support, I'll just move on from the trade. So you're not afraid to lose money because you know it might happen. But you know, if you have a good trading idea, and you'll know if the trading idea fails, and you're not going to have to hold on to it forever. You're not going to take a massive loss. Like if you have a good idea and you can define when it fails, you're in a good spot. It's like a concept I've said earlier is price interaction with a key level. If you go take bull rectangle, you take a break along in the break of the upper boundary. If the price bounces back into that range, you get out of the trade. You had a failed breakout. You can define when the trading idea fails. So very, very important. Tuesday. In an environment of across-the-board sell pressure, it's worthwhile to see which charts are putting in higher lows. This is the concept of relative strength. Now, oftentimes, the market will move in tandem, in concert. It will move together. And what you want to look at, especially after like a major volatility event, where everything drops 20, 30%, for example, then you want to drop to lower time frames, because again, after volatility is when you can drop to a lower time frame in classical charting. And then you want to look for relative strength. While these trends are consolidating, some of them are holding their higher lows in the 1 hour or the 4 hour, and other ones are not. So you want to be looking for relative strength. That's what this talks about. Which ones are putting in higher lows? Right? When everything is dropping, look to see what is holding up the best, because when the dust settles, those are going to perform the best in the kind of near future, okay? Wednesday, cut the trade as soon as you realize you made a mistake. You need to destroy these errors before they grow and destroy your bankroll. This is war. This is war. Don't let these errors take you out of the game. You should never let a single trade or a single mistake take out your bankroll. I mean, I've done that, right? Everything I talk about in my books, I've done, sometimes multiple times, and I want you to avoid it. So for example, like if you enter in a breakout and it becomes a failed breakout, don't hold and look for another reason to stay with the trade. Just move on. Say, okay, I made a mistake. Or not even I made a mistake. The idea was a mistake. It didn't work out. You need to destroy the errors. You need to eliminate those mistakes before they grow. This is so critical, okay? Thursday, it is hard to go broke buying dips in an uptrend. Now, I originally tweeted this out in regards to Bitcoin. I don't know when it was, 2021, 2022, who knows? But it's the idea that trends tend to continue. So again, if you want, this is a very important general principle. If you want to go long, wait for an uptrend to dip. If you want to go short, wait for a downtrend to bounce. And this is just the idea of orienting yourself as a trader, as an investor, as a speculator to trade with the trend. So you find a well-established, a mature uptrend. You wait for it to dip to a key level you can define your risk at, some major support level, and orient yourself that way, and you're going to do just fine. Friday, after a big loss, do not try to make that money back in the same play. Since you do not have a good feel for the chart, you're likely to repeat the mistakes that cost you money in the first place. Same money in the first place. So it's funny. I've done this. This is a really hard one for me to do, but I've gotten much better at it over the last 4 or 5, 6 years. This is a hard one for me to avoid. So you play something, and it's almost like after you lose money in it, you almost want to revenge trade it. Like you want to make it back in that same play, right? Like I lost, $3,000 in this play. I want to make it back in that play, so I'm even on it. So I don't feel like that play owns me or has some kind of power over me. But man, that's a big mistake, right? Because muscle memory is important, and the muscle memory helps you get a good feel for the price structure. And if you made a mistake, or if you had a bad, you played something wrong, you probably don't have a good feel for the chart. And if you try to make money back in it, it's probably just going to be another loss, right? It's better to just play something else. It really, really is. And that's why I really recommend if you have a big loss, delete the ticker from your watch list. Stop watching it. Just move on. Go play something else. There's going to be another opportunity. There will be something else for you to play. I promise you. Saturday, study the chart ahead of time so you're ready for no matter what unfolds. Otherwise, sit it out. So this ties in with a lot of my other quotes, right? You don't want to just bounce around. Someone mentions a play, you jump in and you just play it without studying it, right? If you haven't been studying something and watching it, you have no muscle memory, you have no feel, okay? So don't play it. So whatever you do play should come from your watch list, something you've been studying, you've been analyzing, you have a good feel for. And if you haven't studied it ahead of time, just sit it out. Just wait. Just wait. Study and be ready for a real opportunity in a play that you have a good sense on, you have a good feel for, okay? Sunday, hang in there. Most successful traders, they blow up their brokerage account at least a few times before they make it. And it's true, and this has happened to me many times. When I've done this, I've taken a break and I read another textbook. I went and I studied and I got better. I took a break to let the emotions subside, to be ready to want to try again. I added some new skills, so I came back with confidence, and that's how I made it. And I blew up many accounts, and so it will happen. And so don't feel bad. Just make sure you don't just immediately refund the account. Like if you blow up your account, take a break, let the emotions go away a little bit, go read a textbook, watch some of my educational videos, and then try again and make sure you're using a trading journal, okay? That's critical. All right, so this is from my third book, Trading Quotes, A Daily Dose of Trading Wisdom. This is a book I published in 2022. I'm incredibly proud of it. And I'm making the whole book free. So I'm going through week by week. We're making really good progress. That's in the playlist, Trading Quotes, on my YouTube at Cheds Trading. Make sure you check out the Trading Encyclopedia. I'm on Twitter at Big Cheds and Bitcoin Live, where I am a founding analyst. I hope you folks are enjoying this series. I want to say I really appreciate you. I want to say thank you. And we will dance on the way out, Church of Eight Wheels. And I'll be back with another one of these videos pretty soon. All right, folks, thank you so much. Let's do this.